Hello everybody, welcome to Precision Price Action. This is episode 1. First and foremost, we're coming into the second half of 2021. Me personally, I've had a lot to deal with in the last few months. Lots of traveling, lots of business meetups, and some new ventures that I am a part of and creating. And now I've just touched down in Thailand for the next 6 months. I'm going to be training for the majority of my time here, but also getting heavily and deeply back involved into the market on an intraday basis. So this video and this series of videos, I'll be doing 1 or 2 a week, maybe just the one, depending on the market movements, depending on the opportunities that I find and seek out throughout the week, Monday to Friday. And I'm going to be trading a multitude of instruments. 4 or 5 currency pairs, gold, some oil, US 30, and also maybe looking at some cryptocurrency setups as well and applying these methodologies onto those instruments. Last week was my first week back into the market fully, with full dedication, as I've been in the quarantine hotel in Bangkok. This is my 13th day, my 14th day tomorrow, and then I am released in the next 40 to 48 hours. It's been one hell of a mental test, to say the least. I've been cooked up in a room for the last 2 weeks. But it's been a very, very good time for me to knuckle down, rearrange 1 or 2 things, and also get my mind back into full-time trading. The last time I was super focused on the charts was last quarter. We had a brilliant quarter of 2020, and I've been here and there on the charts. I've been here and there in trading for the last 4 to 6 months whilst traveling. And now for the next 6 months onward, we are going to absolutely destroy the market. So I'm going to go through my setup right here. My aim is to deliver knowledge and some powerful tooling which will allow you to gather much data on the instruments mentioned in order to find multiple opportunities within the day, multiple trade opportunities. Even in the Asian session, I don't normally trade the Asian session, but the time zoning here is a little bit different in Thailand. So London session, it starts around 11-12 in the afternoon. So I'm going to be focused on doing training in the morning, training in the afternoon, and training in the evening at set spots, set times for my timetable. But the time zone here actually gives me a leg up, because I can trade if I wanted to wake up at 8 a.m, 9 a.m. in the morning here, Bangkok time. I will be able to catch the Asian session, catch the London session, 12-1ish in the afternoon, and then also catch on to the US session. So more or less my entire day is jam-packed with all of the market action. Then the liquidity will start to die off more or less when I sleep. My sleep pattern is going to be relatively strict and straightforward, but I'm only looking to maybe sleep 4 or 5 hours a night and just jump straight back into the game. So what I'm going to be doing is, this is my Twitter handle, okay, Ezra Capital. I'm on a fresh start into the next 6 months. I'm going to be posting a lot of trade setups over here in real time for you guys. Follow. It's going to be public, but also you guys can follow me here for some of my immediate updates within those trading sessions. And what I'm going to be doing on these videos is going deeper into why and how I'm picking out certain trades, showing you the certain tooling, and keeping it very, very strictly straightforward in terms of the strategy. The strategy is just reading price action to a very, very straightforward and particular, precise degree. And this is what you can start to implement into your trading to find high risk reward setups, multiple setups throughout the day. And what we're going to be doing is, the majority of my trading setups are going to be, these are my time frames over here. So basically, monthly, weekly, daily. Okay, we're going to be focused on a weekly as we do normally. I'll do a full top-down analysis breakdown in a moment on all of these currency pairs and instruments. Weekly, daily. Then the execution time frames range from the 30-minute, 7-minute, and the 2-minute. Okay. A lot of the trades will be taken from the 7-minute and the 2-minute. Okay. But because I am working strictly intraday and strictly intra-session for each and every trade opportunity, the 30-minute is super helpful for that. I'm not looking at the 4-hourly, I'm not looking at the hourly. And now with this being said, I'm not eradicating or erasing any of the previous content that you guys have been studying, using on your charts and using to actually take trade setups. What I'm bringing forth to the table here and what is recommended is all of these setups. Okay, I just have one tab. So what I'm doing is just I have all the setups drawn on one tab, and I'll be flicking through, and all my analysis for each pair will obviously be on this one tab. So I'm keeping it very, very clean and very, very straightforward. And I'm just going into trade setups and running my bias directly from instantaneous price action. As you can see here, these are some of the setups from last week, which I'm going to go over with you and give you a good idea as to how, why, where I'm actually placing trades, getting out of trades, how am I finding certain areas, certain levels, keeping it extremely clean. So what I would recommend to you guys is to actually create a completely new tab aside from what you've been doing before. If you're finding success with what you're doing, great, but I can guarantee that implementing what I'm going to show you over the coming weeks and months will increase your strike rate in the market, increase your confidence, and also it's a huge eye-opener. And for this as well, guys, you have to be mentally there, and I mean super sharp. So for the next 6 months, I've had a lot of fun this year, since I've been out of England November last year. I've had a lot of fun, a lot of hard work on other projects that I've just mentioned, but now I have the time, I have the strict routine, I have the discipline. There's no more parties, etc., etc. for at least the next 6 months. I'm going to be doing some solid hardcore training, and I'm looking to elevate my mind to a whole different degree. And whilst doing so, implementing that into the market and really coming into these lower time frames, smaller time frames, to pick out high yielding opportunities, multiple throughout the day perhaps. I can't really put a number on how many trades they're going to be placed or highlighted throughout the week. It could be even up to maybe 20, 25, 30, depending on how active and how many pairs I'm actually looking for these setups, etc., etc. So I'm just going to roll with it. And as I say, I would create a whole new tab and have various currency pairs. So over here, this is my watch list. Okay. Gold, euro, pound, pound Aussie, euro yen, oil, US 30, and I just have these here for monetization purposes, but we can look at some of those as well as we go along. Now, tooling, as I mentioned, I do have I'm quite OCD when it comes to charting. I like it to be very, very neat, precise, and very, very clean. So just before we get into the top-down analysis segment of, let's start with gold, for instance, I have multiple lines on the chart. So my toolbar is here, okay? So I'm using the arrow, favorited, trend line, horizontal ray, ellipse, call out. Sometimes I'll use that, text maybe, that's just obviously for plotting on certain notes. Fib retracement, you guys should have all of the settings for that. Anchored VWAP, sometimes I'll use that. Rectangle, use that only on a 2-minute time frame at the moment. Path, here and there. Forecast is quite handy. I'm sure you've seen this tool on my Instagram before. The horizontal line, I've got the long and short positions for the risk reward tool. Vertical line, price range, I really enjoy using this tool. And I have the highlighter tool there. Okay, I have the highlighter tool, super handy for just plotting on, extreme highs, lows, swing lows, whatever it may be. I enjoy using that tool. I have this tool, price note. So sometimes when I'm doing my intraday analysis, I'll look at the highs and lows as I have done here, and it just, it's good for clarity. Just sticking these price notes on, very, very clean, very, very straightforward and effective. And then I have the parallel channel there as well. So they're the main tools that I'm using. And I would like just to say, okay, so on the daily, let's look at the daily chart here. Okay, you can see that the line tool is showing on the daily. What we want to do with that, okay, what we want to do with the line tool in particular, the trend line tool, visibility. I want to turn days, weeks, months off, okay? Hours, no, and I want to put that to 30-minute max right there. Okay, now these lines, the new ones that I will draw, say 30-minute, we've got an area right there. If I then switch over to the daily, it's not going to show on the daily. All of these right here are simply from last week. So I'm just showing you guys even that tool right there. Let's just take all of these off for a moment. Okay, so daily needs to be nice and clear and clean. Let's go back to the 30-minute. Okay, so that's the one I've just drawn on the 30-minute right there. So I would recommend this here, placing it so it's only visible on a 2-minute, 7-minute, and a 30-minute, again for clear purposes. So when we do monitor the daily time frame, it's very, very clean, straightforward, and we're just looking at the pure price action on the daily. Weekly as well, as you can see there. The weekly time frame, we have our standardized horizontal areas which go from the weekly highs, weekly lows, previous weekly highs and weekly lows. So at the moment the market's Sunday, market's closed. That's the high of last week, so I'm going to go and update that. If gold decides it wants to break up higher, one of the next levels to the upside is definitely going to be, so we can see here where the wick is right there. There's one there, and then we also have this area of the wick high there as well. So all of these are the weekly levels. Coming back into the day, looking at gold right now. Let's remove that because that's last week's information. We have broken through one of the weeklies. We've had clear support on the weekly. We've came up to make a high around 1912, and we're consolidating a little bit right here. The blue ones as well, guys, they're actually the dailies. So on the daily time frame, I'll plot some of the highs and lows there again, just for the clear marking out purposes, where it does actually help and assist when we're looking for daily targets and potential reversal areas as well. So we have our weeklies, our dailies, and we can come into the 30-minute. Now with the dailies, I keep them on every single time frame. We can take them off on the weekly if we want to, but I do keep those ray tool, the ray tool here, horizontal ray, I do keep that on all time frames, because they are going to be extremely valuable from trading from some of the daily areas of support and resistance and the daily highs and lows, which we have printed on here. And as this is an example of one of the target areas that I was using last week, 1888, for some of the gold shorts that I did 3 gold shorts to this level 1, 2, we can see the accuracy there as well, and then boom, 3 at a reversal. Late on Friday afternoon US session, I did call out the long trade on gold. We'll get to that afterwards. And as you can see here, we've made that new daily high now. So in the coming few days, just looking at this pure price action, we could potentially be expecting a pullback below. Depending on how PA reacts around here, we could be looking for a pullback. 30-minute time frame and a 7-minute time frame. This is where I would mainly deal with highlighting the highs and lows at the bodies of the candles. So here we have the body going across. This is a clear support area where gold could come back into. You can see as it lines up over here as well with some of the highs that were formed intraday. This area right here, that is, if you go to the 7-minute, it's one of my 7-minute areas from the bodies of the candles right there, and I brought that across. That was extremely helpful as well this week for highlighting here. I was looking for the buy trade on gold on the pullback into 1902, and late Friday that was actually met and achieved. And again, if you follow the Twitter, I'm going to be super active on Twitter with some of these calls as we go along, and you get more used to the information on these videos, and by looking at some of my real-time chart analysis and trading setups, you'll be able to it's a very, very simplistic way of looking at the market. I know you have the highs and lows on the sessions, the session times, and also the volume profile. What I'm saying to you is, if you want to get really, really much more deep on a deeper scale into some of the intraday setups that can be found, which can keep us busy, we can implement these time frames and these rules right here as well. So if you go back to the daily time frame, as you can see, all we can see is the weeklies and the dailies, keeping that extremely clean, looking at the highs and lows there. And going into the 30-minute, our horizontal, our trend line tool is there. Okay, so that's area from the 30-minute, area from the 7-minute. and we don't want to congest the whole areas as well. So if you look at this, if you just zoom out, we have quite a clean area to try our best to focus on the areas of reversals, focus on areas for potential rebounds. Even if this area right here does break through, we know that we have heavy space up here at 1912 on the weekly where gold could potentially be attracted into. If it is attracted into that level, we know it's extremely strong. It could make a new high, spike above, and then we could be looking for shorts back down to A, B, C, and D, and maybe even back all the way back to the lows. So that's that. The dotted highlights, okay, the highlighted tool, if you look at this, whoops, if you go to settings, oh, sorry, 1 second, settings here, visibility again, hours, okay, we're not really using hourly time frames, so that doesn't really matter too much, but here, minutes 1 to 30, okay, so that's only, these are only going to now show, okay, on the 2-minute chart, 7-minute chart, 30-minute chart. So when I'm going through, for instance, I could place one here to mark out a potential high, and it's a good visual to have on. I do all of this manually. If I want to get a little bit tighter in there and have them a little more accurate, what I can sometimes do is just come into the 7. So the 7-minute and the 30-minute is where I'm going through and placing these highs and lows on. Any drastic highs and lows or range highs and lows, then I would come in and simply put, I would use the price note tool in order to just mark these on as we go along. So what we're trying to do, we're just trailing with price, okay? And the more we do this throughout the days and the weeks, we can get used to the current price, the current price action, which has played out over the last few sessions and days, and we can become more familiarized with it, and we can gain confidence because once we see the market is doing the same thing throughout the week and reacting to certain levels, and we can see all these price points here, subconsciously we're building up our tolerance factor, and we're also gaining more confidence to actually execute from more or less these levels as well. So again, I'm trying to keep the chart as clean as possible, but also at the same time have it intellectually stimulating, so to speak. So we're constantly looking at these numbers and we're absorbing these into our mind throughout the day, throughout the sessions, throughout the week, and throughout the month. So going into the 2-minute, just a quick explanation on the 2-minute. The 2-minute time frame is extremely valuable when it comes down to executing on pullbacks into new highs, and also picking out bottoms and picking out tops. What I do here, okay, let me just delete that for a second. What I do here is when I'm trailing the market, when the volume's in, before a session or in the middle of a session, and it's rebounding off some of my main areas, I will come into the 2-minute time frame. And again, with the 2-minute time frame, you have to be alert and vigilant mentally and emotionally, because obviously the time frame is representing fast movement, and what we need to be is fast and disciplined in our chart time and how we are spacing out our trading time throughout the day and how we are adapting to daily life. Okay, so for instance, last week I was on the charts for maybe 6 hours a day. Okay, 6 hours a day, and what I'm doing on the 2-minute time frame, so my main execution time frames, guys, are mainly 7-minute and 2-minute. If I see something on the 7-minute, like here for instance, we can see these little lower swing highs being created. There's a potential high there. This could be a potential fake out from 1903.5, and gold could start to maybe trail down and reverse. Even from this potential first target, 1898, as to where it is around now, it's still like 50 pips from 1903 to 1898. So with that being said, what I would like to do, if I do have a potential setup there, I can come into the 2-minute time frame and I could go in, and again with this, guys, if you double click minutes, 1 minute, you just want this on the 1 minute. You don't want this on, don't want the highlights on the 30-minute. You don't want them on the 7-minute, because the 30-minute and 7-minute, we cater for those with this simple trend line tool right there. So this here, as you can see, what we can do is if I just copy and paste this one, right, so we have this intraday 2-minute support being formed right there. Over here we have the pullback. Okay, we can see the volumes came in, the volumes came off. At the pullback, what we can do there is we can bring this across, as you can see, it's a solid area of support for gold. On gold, on the 2-minute time frame, it is making higher highs, higher lows, higher highs, equal lows, higher highs, equal, range bound. However, tying that in with, let's see what we see on the 30-minute there. The 30-minute, we have 1, 2, 3 wicks. Okay, let's just assume the market's open right now. We have a potential base point, okay, because we can see the heavy volume's been pulled right back off that. And even at that level where the market did find support, we can take the body of those two, and as you can see, we pull back into that area for a solid area of support, and then we started to rally again. So our goal here is to really connect our minds with the market, connect our minds with what we can see, and connect our mind to being as strong as we can with these lower time frames in order to execute and have the highest risk reward potentials. And we can also turn up the volume that way as well if stops are tight. On majority of these setups on the 2-minute time frame, your stop loss is going to be around 15 pips. So with this as well, what's good when you start to get the hang of it and start to execute on these lower time frames, let's say for instance, you're not going to be sat in a trade for too long. Sometimes you can be sat in a trade for maybe 2-3 days out of the week. With that being said, if you were sat in the trade for 2 days and then it finally hits a stop and you've just been in drawdown for some time, you've missed 2 days of the week. Here, the good thing is it'll take you out within no time if you are wrong, and then you can just simply move on to the next setup, next currency pair, next instrument. So we're actually using time management and putting that on our side by being a lot more precise, in tune and intuitive with the market. So for instance, here we have this small areas forming, okay? So you can see we've made the high, and then we have this small area that's forming over here. Now, what if, let's suggest the market was open, we looked at the 30-minute, okay? We've looked at the spikes on the 15, lower high, lower high, lower high. Will there be weakness? We can see that this floor needs to be more or less taken out on gold. So as a reversal, we could see and wait, we need to wait for that area to be broken. Okay, we can maybe pull back into that zone. And then from there onward, we could look for a nice short. That's 50 pips. That can happen in, I don't know, that could happen in 1 hour, a nice 50 pip trade. We can watch the price action around here, keep it trailing, keep it moving, and then see what other opportunities do come up. Now, so remove that, take this off. Okay, and the good thing is, again, as I've just showed you, with these small areas just being set up to be on the 2-minute time frame alone, when you go to the 7, when you go to the 30, when you go to the daily, look, it's still clear. It's still it's still very neat. Chart hygiene is a massive thing, and I'm a huge believer in keeping the charts nice and organized. And then again, when we come back down, we can see all our areas. Okay, we can see 7-minute, 2-minute, and we can execute from there. What we can see on the daily on gold, well, for instance, number 1, let's look at the monthly, because we're coming into a new month. Now, the gold month, previous gold month, has been exponential. Starting around, we started at 1770s, say, come down to 64s, and we've gone from 64s, all, this is a huge bullish month. Go into the week, same thing again, 1, 2, 3, 4 powerful weeks. Go into the day. What we can see here from the price action perspective is that we've used this clear area of support, one of the weeklies. We have the weekly at the upside, and after 2 days of consolidation, we have created a higher low, higher low, higher low there on the day, and we could be pushing up higher into 1912. So with that bias being said, what could happen on gold, as you know, just an overview, we could fall back into this area or fall a little bit deeper, reverse, and then start to move to the upside and push into 1912. With that being said as well, again, imagine if the market was open right now, because usually we can see a few fake movements in the week on these currency pairs, Monday, Tuesday, maybe Monday morning. But let's just assume that the market was open right now. We have a bullish bias, and then what we'll be looking for on here is for gold to take out area 1, small pullback, and then potentially start to accelerate into the 1912 area, which is again around 70 pips. 70-80 pips from the current market price. So what we can do, and again, if you get used to the 2-minute time frame, you can see all of the peaks and valleys. And when you start to line all of these up, your clarity on the market and trading does start to advance quite a lot. Now, last week, towards the end of the week, let me go into the 30-minute time frame for a second. 1 sec. Okay, so last week I had a gold short on the Friday before I went long. I had 2 gold shorts actually, but one of them was simply derived from, okay, so here was 8 p.m. end of the US session, the US high. Then we came into Asia. Asia tested this area once more. We have the dot here and dot here. Again, visually, you'll see that these are really helpful because when the market, let's say this blue candle is open and we have the price at the side and we have this line that runs through, in real time, when you see that line's there. When the line's there, you can see it exactly, okay, cool, at that same high right now. So visually, it's quite appealing, and it really does help mentally as well. You'll see what I mean when the market is open. So for instance, here, as you can see the blue line, mine's blue. You can modify this though as well. But that's the current price, that's the current closing price, 1903. But if you track it and trace it all the way across here, we can see that it's next to the blue dot. It's kind of taken out that high a little bit, as it did here with the previous candle. So now it's like, okay, are we due a pullback? Higher time frames are suggesting bullish price action, but we could be due a pullback. So could we even make money on the pullback? Wait at one of our levels, wait for the PA to actually show us what's good, and then go long as well. So again, we're trying to keep things very, very precise. So on the gold, so that was a daily low there that was created. That's on the daily time frame with our ray tool. So we pulled back, made a high, okay, made that little low there after the pullback as well. We could even just trail that just there, as you can see. 1, 2, breakout, retest there, continuation to the downside. So that's a nice short. Again, we have a double top, if you want to call it that. I'm not too interested in labels or you know, standard price patterns, but I can see where Asia pushed it back up, reversed, even tested the back end of that candle, as you can see on the 30-minute. But let's go to the 7-minute. So on the 7-minute time frame, okay, that's the wick form there, on the 30. We come in, we retest that, we break out, retest, okay, lower swing high, we start to trail, and then boom, into that area. 1888 was tested once more. You can see now market starts to pull back up against, and then we can even go into the smaller crevice areas where we can go in and start to highlight where the bodies are. Broke above that, retest there as well. Nice action long if you really wanted to take that. 2-minute there. Let's bring in the 2-minute, and this is all of the 2-minute. There's a 2-minute here, as you can see. Broke above, pulled back, broke above. Let's go back to the 7. 2 minutes quite advanced, but if you start to practice on the 30 and the 7, you'll easily be falling into the 2-minute within 2 weeks of practice. And then again, tracker trace, same again. 1, 2. That's a 30-minute wick, 30-minute wick, retest, boom, dump, fake out. Okay, back to the upside, and then we're starting to trail this in and out, in and out, in and out, again and again and again and again. So and that's just gold. So that's just a steady introduction, steady warm-up. And again, over here, 1 drive, 2 drive, 3 drives to the high. A few areas there as well which have been respected quite well on gold. And what I like to do, I try to keep it minimal, because we're talking within like a few hours, these areas will be broken, retested, market will move, change structure, break, retest, you know, rebound, etc, etc, etc. So I'm gonna cut this video here. I'm gonna cut them at 30 minutes. I want to do it in bite-sized chunks. So this is episode 1. We're going to episode 2.